Alright, Chapter 5, Recite. First question, what is a statement of cash flows? So a statement of cash flows is determining how much cash goes in and out of your business over a period of time. It's not just a snapshot. The sum of this whole statement is to determine how much cash you have on hand. There are three categories of this statement. The first is operating costs, the second is investment activities, and the third is financial activities. It's very important to know that the cash flow statement uses a cash-based system of accounting. The accrual system would not give you an accurate number for your cash on hand, because you would have accounts receivable included in that, which is not cash you have to spend. What is the purpose of the statement? The purpose of the statement is to determine how much cash you have on hand, so that in turn you can decide if you can pay your bills, your employees, purchase inventory, things like that. So it's really critical for everyday operations. It's also used for banks and creditors to find out if you can pay your bills or pay your loans. So if they're going to give you a loan, they want to make sure you're not a liability and you can pay off what you're borrowing. Third question, what are cash and cash equivalents? Cash is like cash on hand. It could be an account, a bank account, or it could be literally in your hand or in your pocket. It'd be like a currency. And then cash equivalents are things that can be easily converted into cash in a short period of time. So that could be like inventory, that could be like liquid investments, stock, things like that. Okay. How is a statement of cash flows set up? So a statement of cash flows is set up into three sections. The first section is operating activities. The second section is your investing activities, and the third section is your financing activities. These three sections are added together to give you your sum of your total cash on hand, and then that finally is added by whatever cash you had on hand the year before. So yeah, that's what that is. Okay, so a little more in depth, what are operating activities within the statement? The operating activities are going to be your things that are your revenue and your expenses. So revenue, like any money you're bringing into the company, and any expenses you're paying to keep the revenue coming in. So that could be your inventory. That could also be something that's included in that is your depreciation costs. So that is what your operating activities are. Sixth question, what are investing activities? So investing activities are things that, like buildings, they're long-term assets. They're going to be like buildings, property, equipment. It could even well, yeah, that's pretty much what it is. So these things are pretty much all negative cash unless they're sold, which would give you a positive balance. Okay, what are financing activities? Financing activities are things like loans out or loans in. It could be cash equivalents, I guess. It could be stocks, dividends, that sort of thing. So finally, once you have these three sections, you're going to add them all together. Your operating activities, your investing activities, and your financing activities. You're going to add those three together to get your total cash on hand over the accounting period, and then you're going to add that to your previous cash, and that's going to give you your total statement. So that's Chapter 5.